Speaking of banks, let's get to PNB Housing. PNB Housing, it's expecting, I mean, it's already announced that it's expecting its retail loan book to reach 1 lakh crore rupees by FY27. So that's 2 years from now. The company is also intending to increase its non-housing finance book to about 30% by giving loans to those whom loans against property, that is to people who already have a home loan. To discuss this and more, we have Girish Kousgi, Managing Director and CEO at PNB Housing Finance, joining us. Girish, good morning and thank you very much indeed for joining us. But first, let me discuss the housing finance space itself. We saw a lot of luxury housing purchases and projects. We haven't heard much about affordable housing, the space where you lend. Your thoughts, what's the demand like? What kind of growth are you seeing in the coming year itself? Let's postpone FY27 discussion for now. How do you think FY26 may pan out?
Well, good morning, Latha. I think if you look at the market, all the segments, whether it is luxury, super luxury, emerging, affordable, I think all are doing well. First, let me talk about affordable. We are seeing very good traction. As of last quarter, we were very close to 3,000 crores. The plan is to get to 5,000 crores in affordable book by end of this year. So we are seeing very good trend, and not just in affordable, even in emerging and in prime. Of course, there are a couple of markets because of temporary hitches. It's slightly slow, but I think market is very good. We are seeing very good.
So is there any geographical guidance with respect to your loan growth in the affordable housing segment as you plan to scale it up?
We are a nationwide presence, so we largely focus on south, north, and west. So for us, south is slightly more, followed by west and then north. So it's almost similar, so not much of a difference. But affordable space is one space, which has gained a lot of traction in terms of demand. And we are seeing very good growth in all the three regions, that is north, south, and west.
Okay, Girish, you've spoken about at least 30% of your book going as, looks like consumer durable loans to those who have, those who own property or those who have a home loan. Isn't there a danger over there of overlending? Considering what Reserve Bank has drummed into our ears, why are you so confident that you will be able to do that? If you gave a CD loan to someone who already has a home loan, there is a overlending fear also, isn't it?
Yeah, Latha, I think we are not into CD business at all. We are only into...
So what is this property, loan against property?
Yeah, both into housing and non-home. Non-home comprises of loan against property, lease rental discounting, and loans to commercial spaces, office spaces. These are small retail outlets. Now, if you look at our entire portfolio, our retail book is 68,000 crores. We plan to take this to 1 lakh crore by FY27. Out of the 68,000 crores, loan against property or the entire non-home book is about 28%. So we are talking about increase by 1% or 1.5%. I think that is not at all big given the mix and the demand in the market. So these are loan against property where the LTV would be quite low. It will be average about 50-55%. And this is for end use. This is only for business end use what we give. So we don't see any challenge in this. And our focus is not really to increase non-home. Our focus is really on home loans. We want to increase our home loans. And you also spoke about the growth for this year. We had guided the retail growth of 17%. As of last quarter, we've already reached 16.2. So hopefully we'll be able to breach that this year. Our retail growth is going to be over 17% this year. And for next 2 years, it should be in the range of 18 to 18.5%, 19%, thereby taking the retail book to 1 lakh crore. Out of 1 lakh crore, affordable book will be 15,000 crores. Emerging will be about 25,000 crores, and the balance 60,000 crores will be prime.
Okay. Oh, excellent. You answered some of the questions that were in my head. I was asking you for the arithmetic of this 1 lakh crore. Thank you very much for that. But, let me come back to the point you made about, going into loan against property, especially in the commercial space, lease renting, etc. What does that do to margins? Will these improve margins as also your ROE? ROA. It's a 13% yield now, right? What kind of an ROA are you looking for now?
So if you look at the entire mix, as I mentioned to you, about 28% is non-home. I think that trend will continue. That is not going to significantly lift the yield. What will increase the yield and thereby increase margin is the segment shift. If you remember 2 years back, we were predominantly into super prime and prime. Over the last 2 years, what we have done is we have done two things. We have reduced, completely exited super prime. We are reducing our exposure to prime segment. We started affordable little over 2 years back, and the book will reach 5,000 crores by this year end. That will come out about 12.5% yield. Number one. Number two, emerging we started this year. Emerging, the book will be about 25,000 crores by FY27. This will be at a higher yield compared to prime. So because of segment change, because of control on cost of borrowing, the margins would improve, not because of the shift from home to non-home, which will be hardly 0.5%. That's all.
Girish Kousgi is still with us. Girish, thank you very much for your patience. Just leave us with how are you looking at housing demand itself? Has that been very good? You said that you will go higher and higher in terms of the rate of growth, but is there adequate demand?
So there is actually very good demand. All the four segments, super prime, which is super luxury, prime, which is luxury, emerging and affordable, all the four segments, the demand is quite robust. What has happened is that, if you look at Q3, couple of states, for example, Karnataka, there has been slight delay in registration. If you look at MP, there has been some challenge with registration. If you look at Maharashtra, because of elections, there was a bit slowdown in terms of the process of getting the registration done. So these are all intermittent challenges, nothing to do with demand. Demand is
Yeah,
quite
Girish,
robust. As I mentioned to you, we have not seen from April till now any slowdown. Actually, we are seeing increased demand in all the segments. And which is why I said that.
Girish, 1 minute. I should have phrased it differently. There has been a liquidity tightness in the market. Raising money has not been easy for banks itself. So it's not any better for NBFCs and housing finance companies because banks have been told not to expose themselves too much to this segment. So are you able to pass on that cost, the higher cost of the money that you raise?
So if you look at last couple of quarters, we've been bringing the cost of borrowing down. And we have enough and more liquidity, and we were able to borrow from banks at competitive rates. However, NCD rates have come down, so there is some exposure to CP. And this year we've got 5,000 crores from NHB, and that comes at a lower cost. So absolutely, there is no challenge, for us or maybe even to the industry at large. I'm talking about housing finance industry in terms of liquidity. There is absolutely no challenge. Only thing is the bank cost has slightly gone up, and therefore we can see shift towards ECB, we can see shift towards NCD, and to a certain extent CP and NHB borrowing. Otherwise, there has been absolutely no challenge on raising funds.
All right. Thank you very much, Girish. That makes us end the year on a high note. The kind of optimism you have injected into the conversation. Here's wishing you a very good, equally brilliant 2025 as well.
Thank you so much, Latha.
Okay, so that's the word coming in from the housing finance company, PNB Housing. Very optimistic on the year that will be and as well on the year that's just ending.